U.S. nat gas futures declined about 2% on Friday, despite forecasts for the weather to remain hotter than normal through late July, especially in Texas, and rising feed gas to the nation's LNG export plants. The Electric Reliability Council of Texas, the state's power grid operator, projected another heatwave next week would boost electricity use to a record high on Wednesday, July 12. Based on the computer model data from July 1 to July 28, natural gas-weighted degree days, a composite of heating and cooling degree days, and population distribution patterns that estimate the contribution of temperature to natural gas demand, will total 16% above the historical average, suggesting that temperature-driven gas demand will be elevated relative to seasonal averages. The average total supply of natural gas rose by 1.4% compared with the previous report week. Dry gas production grew by 1.5% week over week to average 101.4 billion cubic feet per day this week, and average net imports from Canada decreased by 0.7% to average 5.8 billion per day. In the first 6 months of 2023, dry nat gas production rose an estimated 6.2 billion cubic feet per day compared with last year, contributing to lower natural gas prices in 2023. Dry nat gas production has remained at record high levels in 2023, averaging over 101 billion cubic feet per day each month. Total U.S. consumption of nat gas rose by 6.6% week over week to average 74.2 billion per day. Consumption in the electric power sector rose by 11.7% week over week, and in the combined residential and commercial sector, consumption increased by 0.9%. Industrial sector consumption decreased by 0.4%. Nat gas deliveries to U.S. LNG export facilities averaged 12.8 billion cubic feet per day, which is 1.3 billion higher than last week. The total number of total active drilling rigs in the United States rose by 6 this week, after falling by 8 last week, according to new data from Baker Hughes published Friday. The total rig count rose to 680 this week, 72 rigs below this time last year. The current count is 395 fewer rigs than the rig count at the beginning of 2019, prior to the pandemic. The number of oil rigs declined by 5 this week to 540, while the number of gas rigs rose by 11 to 135 rigs. As of July 4, the open interest on nat gas contracts traded on the NYMEX decreased by -8,094 contracts to 417,343 compared to last week, which is above the one-year average of 395,548 contracts. Natural gas investors remain optimistic about the commodity's prospects, as the total number of long contracts outnumber short contracts by 141, with 50% of total contracts being long. Moreover, compared to last week, the percentage of long contracts has increased, suggesting that investors may be increasingly confident in continued strength in the sector. Thank you for watching and have a good weekend.